Eramonsele Aziba, an investment analyst with AfriInvest, joins me now as we talk about markets' expected reaction to the just released or just unveiled National Economic Recovery Growth Plan. Well, we'll try to get connected to him again. We seem to be having issues with some of our the network this morning. But of course, you know what the the National Economic Recovery Growth Plan is really all about, trying to ensure that the economy gets back on track. And just like Bismarck Rwani, the Chief Executive Officer of Financial Derivatives Company, said, the economy is coming from a recession, so you need to get back on track. And how you're going to get back on track is clearly stated in the 140-page document of the Economic Recovery Growth Plan, as it's actually on the website of the Ministry of Budget and National Planning. So let's talk to Eramonsele Aziba, who's an investment analyst with AfriInvest. We've been able to sort out the network issues. Eramonsele, good morning.
Good morning, Harriet.
So this is one plan I know for a certainty the market has actually been waiting for. What is analysts' expectation with regards to how the markets will react?
Thank you once again for having me. I guess we can say that most of the plans that have been stated in the document that was released are broadly in line with analysts' expectations. We're expecting some structural reforms, and from the plans we can see that they've laid out like a medium-term plan which spans from 2016 down to 2020. Expect them to reforms if they are actually able to implement these reforms. We should see some significant improvement in the general state of the economy.
And should we also expect to see a general improvement with regards how investors trade some of this stocks listed on the stock exchange that are in the critical sectors of the economy?
Yes, but you know the plan, even though it has been expected for a while, it was actually just released yesterday. So we might not necessarily see an immediate reaction from the investors' point of view, as currently the major driver of market activity still remains the earnings releases that have continued to come out, even though the earnings, the period for releasing results is down. Given that most of these plans in the document are more medium term, we might not necessarily see a reaction immediately.
Well, for what other segments of the market, like the fixed income segment, for instance, are you expecting to see an immediate reaction from investors?
Like I mentioned, broadly across the general market, we don't expect to see an immediate reaction. But talking about the plans that are stated in document, we believe that one key factor there that could possibly drive sentiment is the plan to ensure that we have a stable, that there's improved flexibility in the management of the foreign exchange market. If you remember back in June 2016, the introduction of the flexible exchange rate, we saw the massive impact it had on general markets. So we believe this is one factor within the document that could possibly drive investor sentiment in the short term. But looking at all the other objectives that they plan to achieve, we don't necessarily expect this to have an immediate impact on sentiment.
Eramonsele, thank you so much for joining me on the program this morning and, of course, sharing your perspectives with us. Eramonsele Aziba is an investment analyst with AfriInvest. Of course, the conversation doesn't end here. We continue it online and, of course, on the program tomorrow. You can be part of it. And also just to remind you, of course, that today is International Women's Day, and Channels Television, in collaboration with the British High Commission Abuja, will hold a high-impact discussion on women in leadership. You don't want to miss that. You can be part of the program by using the hashtag #BeBoldForChange. But that's it on today's edition of Business Morning. Many thanks for staying with us. I'm Harriet Agbini. Have a profitable day.